Good morning, this is Jack from Charting Markets, and this is the pre-market webinar for the morning of Thursday, the 11th of December. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com, and it's published on YouTube after a delay of 24 hours. All right, we saw a bit of a, we did get the quarter point cut. That was not in response to obviously falling inflation. That was in response to falling employment. So that wasn't particularly great from the economic point of view. The result has been muted, which is not particularly surprising. We will see how it goes from here, but at the moment we had some double tops that had formed last night. We had a big decline overnight, much of which has now been recovered. But I'm thinking we might actually be seeing a decline today. We will see how that goes. But there's a couple of ways I could draw this. I've been considering it and haven't gone into the final format yet, but hang on a second. We've got a double top here, which is potentially already broken down. We've got a head and shoulders here, where the right shoulder could be forming. This isn't particularly clear. NQ, again, I drew in a double top support yesterday, and that's broken down, mostly recovered. It may be that we're going to go back and retest this high, but if we do that, I'm thinking we might see a retracement from there. RTY has gone up. This is the one which is this is the index which is seen as most sensitive to interest rates. So this has gone up, and this is the one which has already made a new all-time high. YM came fairly close to that yesterday. It looks closer on the Dia chart. DAX and the SDX both, essentially sideways from yesterday. The little double top that broke down on the SDX is largely rejected. So I think things are still settling after FOMC, but after they have settled, I'm thinking we might see another crack at the downside. Although I'd be inclined to, I'm still leaning towards seeing more high afterwards. All right, let's have a look at the bigger picture charts. Okay, looking at ES. ES, we've actually got another possible RSI 5 daily sell signal brewing here. We've got, do we have that on SPX? Yes, we do. And actually, it's not bad. We will see how that goes. That could deliver first. I'm still expecting to see retest the all-time highs. After these failures of the head and shoulders, I would expect to see retest the all-time highs across the board, because we had 4 head and shoulders and they've all failed. On the US indices. Only IWM has retested the high so far. Dia got pretty close yesterday, and we got very close actually. So expecting to see that retest soon. Qs, and this isn't encouraging for after this move finishes. Qs has been the weakest, and you can see that. IWM's already made a new high. Dia is pretty close to a new high. SPX is a little further away, but it's still pretty close to an all-time high. And Qs is the furthest away. That's not encouraging for the underlying health of the market, but I'm still expecting to see a retest of this high. So we will see. We've got a couple of weeks of Christmas left, and while it's not all the lack of upward movement so far is telling me is that we're not going to make these rising wedges are still topping out and are not in any real danger of breaking. We will see how that goes, but but I am expecting to see those high retests. We will see. Okay, in terms of in terms of the hourly charts, we've still got an RSI 14 sell signal fixed on SPX. We've got another one on the Qs, we've got another one on Dia, and we've got another one on IWM. These still haven't played out, and I'm still wondering if they're going to next. We will see. But I'm not seeing big topping patterns here, and I'm not expecting to see a big decline before Christmas, because you don't tend to see a big decline before Christmas. So it's not a reasonable expectation. Could we see more of a decline than we have seen in recent days? Yeah, we could. So I'm thinking we may well see that. And at the moment, all of these look as though they might be topping out short term. If you have a look at the short term patterns on these, we've got this is a nice looking potential little level top that could play out on the Qs. Very nice looking potential little level top on SPX. Very nice looking potential level top. I am wondering about all of these. and we will see how that goes. All right, great. Let's have a look at the DX chart. DX, we've got a possible 60-minute buy signal brewing. This has been continuing down. So now obviously we've got an open double top target in the 97.37 area to 97.47 area, and that's looking better than it did yesterday, not least because this bear flag that we've had forming on the euro has broken up. And that is weakening the case for DX to reject back up to the high. USD JPY leaning towards seeing a retest this low. That wouldn't be the second low of a double bottom, but of course this overall bull flag could be expanding. So if that were the case, then we would be looking at, we'd be looking at that as the resistance and that as the support, which actually looks pretty damn good. So I think this this flag may be expanding on USD JPY, in which case we could look for a lower. We'd be expecting to see a lower low on that. We will see how that goes. Hang on, sorry, I'm just marking that in. So I'm expecting to see at least some more downside on the dollar. Looking at the ZB chart, we've seen a bit of a rally here. Now, this isn't necessarily going to last at all. We've got these big patterns which are broken down here on ZB and ZN, and while we're seeing a bit of a rally here, a quarter point decline. Well, a quarter point decline doesn't necessarily actually mean anything in terms of bond prices. We're still waiting for the reaction over the next few days, but am I thinking that bonds may be going down from here? Yes, we are actually very close to 16-year highs on TYX at the moment, and I'm thinking we may well be retesting those over coming weeks, and that's the message of these head and shoulders. In terms of how much impact the Fed has on bond yields over the last couple of years, not a great deal. There have been multiple rate cuts in the last 18 months or so, and yields have gone up over that period. So I'm not seeing why that would be changing right now. All right, ZN, we're seeing the same rally. We've got a little double bottom here, which is breaking up, and that could get us back into the weekly pivot area 112.25, or it could just reject into the lows. We shall see. All right, CL. CL has been remarkably unresilient here. We've got, obviously, the Ukrainians are sinking bits of the shadow fleet. They had another one of those yesterday, and there's various supply disruptions which we've been seeing, but actually that's really not moving the needle. We get little rallies here and then they are given back. I'm still thinking we may well be retesting this low here at 56, and after that I'd be leaning pretty bullish. We will see. I have a theory as to why we might see, well, as part of the overall bottoming pattern where we could see oil go up to 100. I have a theory for why that would be. I think a lot of people will disagree with that theory, because basically I'm thinking that unless Trump can successfully force the Ukrainians to surrender to the Russians, I think the Russians are losing. And I think they're running out of money. Their economic situation is looking increasingly desperate, and the amount of oil they can sell, which they're basically selling for almost no profit at current prices, the amount of oil they can sell is actually declining fairly rapidly over recent months because Ukraine is bombing out their refineries and they can't afford to repair them. They don't have the parts to repair them. So I'm thinking we could see a big issue in Russia in the next few months, and that is something which could really send oil prices up. Because if we lose something like Russia is supplying something like, I think, 9% of global oil. It's or is it 9 million barrels a day? It's 9 million barrels a day, I think. So that's probably only about 6%, but it's a lot. There's a fair amount of extra production in the market, but it's only about 3 million barrels. If we see a crisis where a lot of Russian production comes offline and comes off the market, then we could see a surplus of 2 or 3 million barrels a day become a deficit of 6 million barrels a day. And that could really spike prices. So there could be other reasons. Obviously, we've had a lot of unrest in the Middle East, but that hasn't really moved the needle so far. Equally, we could see this break down, but an awful lot of oil production becomes unprofitable basically at these levels going down to 50. Anything under 50 is only going to be a temporary situation as a result. Looking at HO, we are continuing down, looking less like a double bottom. This RBOB is continuing down at the moment, and this is looking less like a double bottom. I'm wondering about retesting these lows across the board. NG, no current positive divergence. We've broken down from this this rising megaphone, and I'm watching this possible head and shoulder neckline here, and we will see how that goes, but we're reaching that now. I'm wondering about a possible right shoulder bounce. GC, this I've drawn in a little triangle here because I think this is a bullish consolidation and may well be a triangle. On SI, we're continuing up at the moment. We do not have, well, we've still got a weak 6-minute sell signal brewing, as that is fixed. But at the moment, we're over 63 and heading up. I'm not seeing any particular reason to think that's going to change. On Palladium, we broke up from a triangle. We could be forming a larger triangle here, but I think this looks like bullish consolidation either way. Platinum, likely to go back and retest this high. I'm pretty bullish on the precious metals across the board. HG, this is a possible head and shoulders forming. Now, it's probably only got another day to 2 days to form the right shoulder if it's going to. But it's a pretty nice looking pattern. And if that breaks down, that would have a target in the 512.50 to 515 area. Looking at KC, trying to get back over the monthly pivot. That's the main thing I'm watching here. If it can convert that to support, we can do more damage to the upside. Bigger picture, if we can't do that, then the bigger picture trend is likely down. Sugar, still looks like a bear flag for me. Haven't quite made it to the double bottom target in the 1543 area, and we may well make that. CC is continuing higher at the moment. No current negative divergence. I'm watching this big resistance level up here at 6700, which is now coming into view. That's a big possible inverted head and shoulder neckline. It's cotton. We've got a possible HS here, but I have to say it's not looking great. It would be cleaner if we went down and retested the low in about the 6310 area. Lumber is breaking up for a double bottom. It hasn't broken up with any force, but we got a weak to a 60-minute sell signal fix, but this is broken up with a target in the 583 area. Looking at wheat, nice looking double bottom, but it's not improving like a fine wine with age. This is heading a bit lower at the moment, and that's weakening the overall setup. Don't have an overall pattern from this high. Wondering if we might develop one. Corn looks like bullish consolidation. Soy, we have seen. No, sorry, I was just thinking that's not the soy chart. It's okay. Soy, we are broken down towards a target in the 1058.75 area. Not really seeing anything to suggest that won't make target. We had a weak 60-minute buy signal, and that's reached the possible near miss target now. On ZL, we are staying under the monthly pivot at the moment. So as long as that continues to be the case, we could do more exploring to the downside. I'm surprised by the degree to which this doesn't tend to move with soy, but nonetheless, they're both heading down at the moment. Live cattle, we've reached a possible IHS neckline here. We have well, this is the main one here. I'm wondering about a possible IHS right shoulder forming. We've got a 6-minute sell signal fixed. An ideal right shoulder low would be in the 215 area. Looking at HE, we have a possible double, well, we've got a little double bottom that's broken up with a target towards the resistance on the possible larger double bottom or part-formed IHS. It's been slow to get there, but I'm not seeing anything to suggest that it won't. All right, great. Let's have a quick look at questions. No questions? In that case, that's a wrap. I'm thinking we may well see a retracement on equities from here. Only a modest one, but just to, work a bit of negative divergence. Either way, it doesn't look as though we're going to be seeing an exciting move for Christmas. I'm not expecting a big impulse up. I think the big news that was likely to trigger that, if it was going to happen at all, would have likely been the Fed rate cut. As it is, I think there are a lot of concerns, and particularly about the future direction of the Fed, as the current Fed chair steps down in May, and the new Fed chair is a grinning idiot who is a sycophant who will do whatever he's told. That means that the Fed is no longer going to be independent, and that has big market implications potentially. We shall see. All right, everyone take care. Well, we'll see if Santa appears. Santa's here. We've been getting our little rally here. It's just not strong. When Santa goes, I think well, I think then we'll see what's really underneath this market. All right, everyone, take care. I'll catch you guys tomorrow, and cheers.